As of April 2025, we, the American people, are $36 trillion in debt. And no, there is no plan to actually pay it off. I mean, consider this. Even if the government confiscated every single dollar in the US economy and beyond, all $21.6 trillion that are in print right now, we'd still be $14 trillion short. That's how deep this hole actually is. So what's the plan? Are we going to default? Are we going to inflate the debt away? Are we going to act like children and just pretend like the monster doesn't exist? Some believe that we could just use fraud or accounting tricks to magically shrink the debt. Others believe that we're heading into the most aggressive round of stealth money printing that we've ever seen. But in this video, I'm going to give you an idea of how I believe the government actually plans under Donald Trump to solve the debt crisis, and more importantly, how you can protect your money, your freedom, and your future from the inflation tidal wave that's about to come. Now, first off, my name is Ryan D. Lee, and this is the Wealth Outside of Wall Street YouTube channel. And on this channel, we expose the lies and the hypocrisy of the financial system. We help you decode what's actually happening in the economy, and then help you build a strategy to actually lead you to financial freedom in 10 years or less. We help you think like a banker and invest like the wealthy and actually win in a game that most people don't even realize they're playing, the game of money. So if you're a driven individual and you're ready to rise above the chaos, I want you to hit that subscribe button and let's dive in. In this video, you're going to learn the math behind why the national debt literally can't be paid off. We're going to discuss the two categories of solutions being deployed, production or printing. We're going to talk about what history tells us is likely next. And most importantly, we're going to talk about how to protect and grow your wealth no matter what they do. Let's start with the truth that nobody in Washington is willing to admit. The national debt right now is $36.2 trillion. The total US money supply, though, is only $21.6 trillion. So here's the crazy part. Even if the American government went out to every home, every bank account, and seized every dollar in the economy, they still could not pay off the national debt. That's not just unsustainable, that's mathematically impossible. Now, some argue that a portion of this debt isn't real due to intergovernmental holdings or even fraud. Trump himself recently claimed that the true debt may be much lower than the $36.2 trillion. But so let's humor this for just a minute. Let's subtract $2 trillion for potential fraud. Now, first off, I love that we're just kind of throwing around trillions of dollars like it just isn't a thing. That's true baller status or true delusional status, you get to choose. Then let's throw in another $7.3 trillion that the government technically owes itself. And finally, let's throw in $4.7 trillion in treasuries held by the Fed. So that would bring the national debt to $22 trillion. But still, even after all of that, we still have more debt than we have money supply. So what does that actually mean? In my mind, it means that they're not actually going to pay off the debt. They're going to inflate it away. So there are two fundamental camps to solving the debt. You can solve it through production, or you can solve it through printing. So let's start off with production first. So number one, let's say that the current president, Donald Trump, and any president coming after Donald Trump would cut and sustain tax cuts. Now, this might sound counterintuitive to cut taxes when we're in debt, but when people keep more of their income, they spend, they invest, and they produce more. Greater American productivity leads to greater GDP, and greater GDP leads to higher tax base. Now, for sure, it's the long game, but it only works if spending is cut too. So number two, let's talk about spending cuts. The government spends over $1.2 trillion per year on interest alone for the national debt. So slashing wasteful government programs would help slow the bleeding. Now, if you haven't done this yet, you should check out Doge.gov, where they show the actual spending reductions that are already happening based on the Doge cuts that they're making. It's the most transparent government reformation we've ever seen, but at the same time, it seems to be one of the most publicly hated government reformations that we've ever seen as well, which kind of blows my mind. But the reality of all of this is less government interference equals more economic efficiency. And then number three, deregulation. If we take away rules, fewer rules leads to fewer barriers, which leads to more innovation. Every dollar that the government spends technically could be said might be a misallocated dollar. So regulations distort incentives and force inefficiency. So the bottom line is production solutions are the hard work path. They take time, they take discipline, they take political courage, and they take rallying as an American public to go out and do the work to raise GDP. I mean, at the end of the day, even if we get tax cuts, even if the government cuts its spending, even if there's deregulation, you and I still have to go out and produce at a higher level. Which is why the government oftentimes turns to the alternative, the easy solution, the printing solution. The easier path is just printing money. I mean, quantitative easing, QE, is when the Fed prints money and buys treasuries. This keeps interest rates low and debt affordable. It also increases inflation quietly and slowly over time. Stealth QE via banks is a little bit of a different story. Banks are being incentivized to hold treasuries. Regulatory tweaks allow banks to treat them like reserves. This props up demand and keeps the debt machine running at a higher level. And then we have this idea of sovereign wealth fund shenanigans, which is regulating things like gold, buying Bitcoin, or nationalizing industries, all funded by printing and borrowing against assets. Accounting gimmicks to make the balance sheet look better, and bada bing bada boom, on paper we have more money and we've just inflated away the debt. So here's what you need to understand. Every one of these printing tactics ends the exact same way, with the value of your dollar going down. Inflation, it's not a bug in the system, it is the system. We've been on an inflation system ever since 1971. If you don't believe me, just open up your wallet. If you even have paper currency anymore, at the very top of the dollar, it says a Federal Reserve note. This, my friends, is the government telling you that the full faith and collateral of the dollar is debt. There is nothing standing behind it. Now listen, this isn't the first time this has happened, so if we have eyes to see, we can look back on what's already happened, how that played out, and we can use that model to replicate what's going on now and give us a better indication of where we're actually going. We can use the past to ultimately predict the future. So after World War II, the debt to GDP ratio hit 120%. Over the next 40 years, the US inflated the debt away. GDP rose, the debt stayed, and the ratio dropped. That's exactly what we're doing again, except this time it's happening so much faster. Because inflation, well, it's no longer theoretical. You feel it at the grocery store. You feel it at the gas pump. You feel it at the rent payment. You feel it when you go to college. Inflation is a real thing. In fact, over the last 5 years, Americans have experienced a 20% permanent rise in cost of living. And while the government slowly deleverages, it's your lifestyle that is actually being leveraged in the process. So the biggest question that I always look at when I see how things are going on in the economy, it's one thing to look at the macro economy and say, it's not fair, it's not right, but that doesn't do us any good. So the real question that I always ask myself is, how can I use these trends? How can I use this data? How can I use this understanding that debt is money, that the past is repeating itself in the present moment? How can I use all of this to actually win? So here's what I'm going to invite you to consider. There is a playbook to win right now. And no matter where you're starting from, you could start positioning your money, or in some cases, repositioning your money to not just win, but to win big. So step number one, I'm going to invite you to consider owning inflation-resistant assets. In fact, assets that actually profit because of inflation. I want you to think about two different scenarios. You have a dollar bill in your hand, which I know is not worth much, but that dollar, you have already traded your time, your effort, and your energy for that dollar. This dollar represents a trade of the most valuable resource that you have. But it also represents the exact same tool that's required to buy your time back. If you ever want to retire, if you ever want to be financially free, it's how we steward and how we position and how we invest that dollar today that will make that reality a possibility. So first and foremost, we took that dollar and we put it in the market. What's going to happen? Well, we're going to ride the market volatility. It'll go up and it will go down. But the biggest thing that will be destroying your wealth silently, subtly, but behind the scenes, always destroying your wealth are the two forms of taxes. You're going to pay taxes on everything you earn, whether you pay it today or you're deferring it in an IRA. So you're basically taking the IRS and the future taxation into your future. That's number one. But you're also paying the silent tax. Inflation is just another form of a tax that's issued by the monetary policy. We don't see it on our paycheck, but because the government is choosing to do the things they're doing, you're paying the price with a devalued dollar. So as you put that dollar to work in an asset that is fighting against economic forces, it's like taking one step forward and two steps back. It's so difficult to get ahead. But on the flip side, if we took that dollar and we put it in an asset that actually profits from inflation, think things like real estate, business, high cash value life insurance, which we call the vault, these assets allow you to profit from inflation with interest rates and returns that exceed inflation. But the biggest value of all three of these assets is they allow you to use leverage. My friends, the only way to win in the game that we play today is through leverage. Again, go back to what the dollar is. The dollar is quite literally dead. The government is telling you exactly what the dollar is. The government is using what the dollar is, which is debt. That's the $36 trillion of debt that we have on our balance sheet. They're using that. Now, they're not using it to buy assets, but you don't have to be the government. You can use debt right now to buy real assets in the form of real estate. And the benefit of this is you're using fake money, leverage, to buy real assets, real estate that rise with inflation. If you use the vault in accordance with this, you can actually route your money into a vault, a high cash value life insurance policy, have tax-free compounding growth for the rest of your life, and at the same time leverage the value of your money to go out and buy a cash flowing asset. Your dollar would now be working in two assets simultaneously, the vault and real estate, and on the real estate, the bank will lend you 80% of what is required to buy that asset. My friends, the way the game is played today and the way the game is won today is by mastering the concept of leverage. In fact, in order for you to become wealthy, you first have to become smarter. Money is a tool. It stopped being what we thought it was back in the 1970s and 1980s. It stopped being a store of value. It is no longer a store of value as evidenced by inflation. It is now a tool of leverage. And that's a hard thing for people to grasp because we have people like Dave Ramsey getting online saying leverage is dumb. You should put your money in a mutual fund and cross your fingers. Now, I'm not going to fault you for doing that. If you decide to do that, just know you're working against the economic forces. If you decide to do what I'm talking about, just know it's going to require a much higher financial IQ. That's the easy way, but you will pay the price of doing the easy way. This is actually a really pretty easy way as well. You just have to raise your financial IQ to understand it. So I applaud you for being on this channel. So if you want help building a game plan specifically for you to win in the game of money during this inflationary deleveraging phase, I want you to comment game plan down below. If you comment game plan down below, I'll reach out to you individually and we can talk about, no matter where you're starting from, how you can achieve financial freedom in 10 years or less using your goals, using your resources, and using your time frames. Until next time, my friends, rise up, live free, win big, and understand that the economy is working for you or it's working against you, and it all depends on your perspective.